everyone. It's wonderful to be here. Thank you to Mandeep and the team at HVS. And thank you to everyone in the room for your contribution in accessing the insights that we're able to provide. I've sat and listened to many of the sessions over the last day and a half, and my view is in the next sort of 10 or so minutes, I'll take you through what are the sort of key facts that you can kind of deduce from many of those themes. First of all, just starting from a global view, and there's really four things that I think summarize it in the most effective way. One is we've left COVID behind, and we're now globally selling more rooms than we ever have across the entire world. Number two is that broadly across Asia Pacific, we're continuing to grow. And really in the short term, it's only been China that has been the outlier to sustained growth relative to where it sits of 2019 levels. Number three is that what we're starting to see in the US is the bifurcation of the market. And what I mean by that is that the economy sector is starting to slow, whilst the luxury and upper upscale with the groups and so forth is still continuing to tick on. So it's a much more evolved marketplace. And fourthly, there are outliers everywhere. We have destinations that are doing really well in absolute and growth terms, and we have other destinations that have got great absolute numbers, but their growth isn't so good, while we have other destinations that both their metrics are lower than we'd ideally like to see, and growth is much slower. India sits well against its Asia-Pacific peers. There are 5 main domestic countries that perform well in the hotel sense across Asia-Pacific. And you can see there that India sits in amongst that in a pretty good space in terms of its growth, both in occupancy and in average rate. But also note that Japan and Indonesia has higher growth. And what differentiates that growth is their exposure to the international market. Now, AI says I should talk about strong recovery, the domestic leisure strength, regional development. I'm going to talk to some of those themes, but I'm also going to delve into some more specifics and underlying views around each of those things. First of all, let's take a look at the perspectives of how things have evolved from 23 to 24. You can see that we achieved occupancy growth, 8% average rate growth, and then you throw an absolute skyscraper of 40% average rate when we look back to 2019. But if you strip that back, taking inflation into account, you're really looking at only about 7% per annum in terms of the average rate growth achieved. Now, 23 was a magnificent year for the industry, and 24 has just backed up those numbers with even more record numbers coming through, whether it is in group ADR or the entire industry's revenue per available room. Now, when you break it down by class, what we're seeing here is a little bit of evolution of the market. At the top end, we're seeing some good occupancy growth with a mix of average rate growth for the luxury and upper upscale hotels, where we're seeing more of the growth for the middle tiers coming just in average rate. A little bit of occupancy, but it is mostly average rate. So demand has kind of softened relative to matching the supply. And then economy, which is probably playing a little bit of catch up. And this includes the likes of Oyo and Treebo and those sort of operators in this mix. So it's quite a good diversified view of what's going on in that economy space, is etching out some good gains to that and really speaks to some of the themes around the opportunity continuing for the economy segment. Now, Karan, my colleague, who many of you know, we often have people tell him, and we have debates internally around, oh, but this market's grown so much in the last few years. That means things are going to slow down. And this graph has no markets attached to it because that's really irrelevant. What it's saying is that just because you've grown a lot in the past doesn't mean that you can't continue to grow really aggressively. It's all about what the market dynamics are. History will guide you, but it's also about what the future market dynamics are looking like. Now, when we break down a lot of the markets that we cover in India, not all of them, but the main ones here, everywhere is pretty much seeing growth. There's very few anomalies to seeing really strong growth across that. I'm going to pick up on a couple of themes here. One is that the markets at the top end who are really pushing a lot of average rate growth, very stabilized occupancy levels by and large. You know, they've got a good diversified mix of what's driving that. It might be groups, it might be the tech industry, just general corporate behavior that's doing that. You've got others that have got, again, a good diversified mix, and they're kind of adding a little bit of occupancy and a little bit of average rate as they're trading through that. And then you have other markets like Himachal Pradesh, which obviously has a very low base from the prior year relative to the floods, unfortunate floods that it experienced. Now, what gives the industry a lot of confidence is that growth was not just in certain parts of the year. It was across all of the year. Now, it was a little softer through the election period in that May and June, and then you had the Diwali swap of the calendar shift. But by and large, you had a lot of movement there. And you'll note, look at July, it was an exceptionally good month. And events drive, I'll come back to that point there. I skipped ahead. We look at the numbers in aggregate a lot. But what I'm showing here is every single little, every dot is a property. And we can still keep it all anonymized, so no stress on the confidence there. But what it attempts to show you is how is the industry evolving across the country by collapsed class level. So you can see that the luxury and upper upscales, in terms of their growth year over year, they're all very close together. They're all getting a little bit of occupancy and all getting a little bit of average rate growth. No matter where they are, they're by and large very much stuck together. Whereas we see for the middle tiers, there's a little bit more variability. Occupancy is much more spread and growing at different paces, whereas average rate is quite consistent. Whereas look at the mid-scale and economy, it really is dependent on the market and what's going on to really drive both the occupancy percentage change and the average rate change. What we've seen across India is that revenues are up, costs are growing marginally, but because a greater share of revenue growth has come from average rate, means that more of those dollars flow directly through to the bottom line. You're not needing to add variable cost to that. You'll also note that labour cost is one area that is matching sort of that growth in costs, and something to be able that has to be watched. And it's really that challenge for operators to balance, like a game of kabaddi, where you've got to be, how aggressive am I on the top line, and how do I kind of defensively play some of those expenses. Now, groups have been the engine room of growth in terms of average rate for the last 3 years, and that's a real turnaround from the past. And that is not just weddings, it's a large component to it, but that growth and occupancy contribution has slipped a little bit, but its average rate growth to total revenue is so critical to the industry today. Now, we looked at this a little bit further and said, well, is it just 1 or 2 markets or 1 or 2 months? And this heat map effectively says that where it's red is that transient rates are higher, so you see that more commonly in Delhi, which is a much more kind of transient-driven market. But outside of that, you can see that pretty much group rate is always higher than transient and really pushing that. And that is not something you see in many parts of the world. In fact, in a few months of the year, the INR to the transient rate of groups was over 6,000 INR different, which is a huge number when you actually take a step back and think about it. Now, you saw there that July in Mumbai was incredibly strong for that. And you can see that not only did the wedding last year drive a huge percentage change in Mumbai itself, it even moved the national average. And I'd almost relate this to like one guy pretty much dominating and carrying an entire cricket team when they toured Australia at the end of last year. Events of all descriptions drive markets. Here we're showing the recent Ed Sheeran concert. When he first announced the dates, look at the occupancy on the books to shoot up. It immediately added new demand that previously would not have existed. It probably would have come at some point, but it pushed it along. Now, across India, all days of the week are growing in both occupancy and in average rate. Good signs, good stabilisation there. But what you can also see is that most of that growth is midweek. And when you look at it by class, again, Monday, Tuesday, and Wednesday is where the majority of the revenue growth is going. That is good, but that also has implications in terms of the medium term. How do we continue to get a more diverse mix and also talk about what type of segments are staying in properties? And I'll dig into that a little bit here, is that nuances exist in the markets. Here is Bangalore's growth, same theme. The percentage growth is much stronger Monday through Wednesday. But have a look at the difference in the occupancy. It's 72% on those nights on average, and it's 57%. That is a huge difference and an opportunity for how you do that. Mumbai, again, most of the growth now skewing more average rate because you're hitting a more compressed nature of those, and the headroom you have is much more limited in terms of growing your occupancy in Mumbai. But there is still on the weekends the opportunity to grow. And I would say that across the weekends, that is really a huge area of opportunity, is how you bring more leisure guests through on the weekend. Within Bangalore, it is not all the same. Hotels and that supply is finding where all the new commercial space is going. Hence why in the north, they've had the most supply, yet they're still getting occupancy growth compared to 2019, and they're getting really strong average rate growth, where the more established markets have not seen their occupancies recover from 2019. And the recent air show didn't move the needle in occupancy. You can see the green line there. It's very similar to what it was over the last 2 years. And obviously it happens every second year. But have a look at that dark blue line on the right. It is massively different. And this strength that it sometimes does, it may not move the occupancy needle, but it sure does on the average rate. And you look at high-tech city, dominating in Hyderabad in terms of holding up that market conditions. The occupancy hasn't fully recovered in that market, yet even with new supply, where demand is where. And the previous panel touched on how important location is. We've seen a lot of listings and a lot of more investment made into the market. That means more stock has to be branded, and of the 15 to 20,000 rooms we've been adding in India every year, the vast majority of that is branded, and that isn't changing, because when you look at the new properties, that's absolutely what's coming from. But where is that supply all kind of coming? We hear a lot of companies talk about we're going regional, so we wanted to have a look at that. Breaking India down, more new supply has entered into regional and leisure markets than it has in the big three cities. Demand is largely matching that supply. That's an awesome thing to see over the period of the last 5 years. As a percentage of the existing, their pipeline to come, there is greater numbers, more to come into regional areas. But in absolute levels, the volume of rooms is very comparable of those big three, even though as a share of it is much smaller compared to those others. An average rate, it hasn't had much of a bearing in terms of that. It's diversified, it's achieving it across the board. It hasn't slowed anything down. We've heard a lot about we need to get more international tourists, because you can't walk away from the forecasts that are out there, and this is just one view, is that outbound overnight nights is going to continue to grow extensively. Whereas you see the green line there is not moving at the same rate. And that has implications in terms of how do you continue to attract the domestic audience, but also how do you then stimulate the international market and be accepting of that. Because it's getting easier for Indians to travel overseas with reduced visa restrictions. And then you get comments like this, that the domestic markets here are starting to slow down, that Goa was a ghost town, etc. Well, is that true? Well, it depends on what sort of perspective you want to take. In fact, over the 7 days through the New Year period, it really does depend. Occupancy was still growing. There was some changes in average rate. It is a little bit of a nuanced and kind of a customized view, but it is fair to say that Goa was no different to any of the other major leisure markets that were seeing things. There was ups and downs. It really is market dependent on what's going through. I don't think there is a structural implication that's attached to it. And this is showing the occupancy for the next 28 days as a trend basis over the last 2 years. And you can see that Goa's flatlining occupancy was not to be unexpected, because the future occupancy was always traveling at a very similar pace to what it was. And one of the things that Karan and I get questioned on a lot is, well, it must be price. We've been increasing our prices so much. Well, I will say that price is not the factor. It is not the factor that is driving the change. Because when we put all destinations, local and international, that, the luxury and upper upscale segments, so we're keeping it quite refined here, in both absolute terms, in INR, there is very little difference between going to a Goa versus heading over to Bali in terms of the actual price. And in growth terms, they're pretty much achieving the same sorts of things. There are some cities that are probably a little bit more affordable, but I'd argue that it's actually just that I want to have a different experience, I want to have the status of being able to say I've been to that market, relative that, if I drop my prices or change my prices, it's going to materially change the demand dynamic. I don't think that is to be true. And in a short-term capacity, what does the outlook look like? This is the occupancy on the books for a whole bunch of markets relative to how they're tracking to same time last year. And they're all within plus or minus 3% of their occupancy. There isn't anything that's different that's going on in the short term. And I'm very optimistic that we're going to continue to see, if I stand on stage next year, that you would start to see continued little bit of occupancy growth and average rate continue to accelerate through that. So in summary, there is a lot to celebrate. There is a lot to look forward to, both in the short term, the medium term, and just the structural nature of where India is going as a destination is incredibly promising. But you do need to be watchful of some things that'll have some implications over the short term. And I'll finish there and say thank you very much for your time. And if you'd like a copy of this presentation, please take out your phones, and if you scan the QR code here, you'll then scroll down to the bottom of my page. We can connect, and you'll also have access to the presentation today. Thank you very much for the opportunity to be with you today, and take care and safe travels. Thank you.